Imagine watching $800 billion vanish before dinner. That's exactly what happened yesterday in the crypto market. From 4.1 to 3.3 trillion in just 8 hours. That's a loss of $100 billion per hour. In Bitcoin, it printed its first 20,000 point red candle in history. This wasn't random, it was surgical. And today we're breaking down what really happened, what it means for Bitcoin, and why this could be a turning point for the entire market. What's up, family? It's Coach Masi, and you're locked in to the Daily Hodl. This is where faith meets finance, and we're talking about Bitcoin every single day. It's decentralized, and this is financial freedom for all of the new watchers on here. So remember, this is not financial advice, though. It's for educational and awareness only. So make sure you hit that like button, subscribe to the channel if you haven't already, and share this with someone who loves Bitcoin news just as much as you do. Let's start with the numbers, because the numbers don't lie. They are facts, and they tell a story that is almost hard to believe and can be very scary for anybody that was perp trading. Yesterday morning, the global crypto market cap was sitting at a lofty 4.1 trillion. I know I was feeling pretty good in the morning. And then 8 hours later, by 5:20 p.m. Eastern, it had plummeted to 3.3 trillion. That's a staggering Bitcoin wipeout. Man, in one single trading session, everything could be gone for, I think, 1.6 million users that invest in crypto. To put that into perspective, that's the equivalent of erasing Tesla, Berkshire Hathaway, and Visa combined, all in the span of a single afternoon. Think about that for a second. Three of the biggest companies in the world gone just like that. Could you imagine that? Well, here's the thing. This wasn't just a normal dip or a small market correction. This was a full-blown chain reaction. Billions of dollars capitulated in leveraged positions were liquidated. Panic selling cascaded through the market, and automated algorithms amplified every move like an echo chamber. You see, it wasn't just numbers on a chart. It was a storm in motion, a perfect example of how leverage, emotion, and technology collide to create extreme volatility. By the end of the day yesterday, the crypto market looked like a battlefield, and billions of dollars had changed hands in a blink. One of the biggest triggers behind the historic crypto collapse, well, maybe the US government shutdown. Now, projected to last over 30 days long. At first glance, a government shutdown might seem like a distant political headline, especially when you're lost in the whole China data stuff and the trade war. But in reality, this is a seismic event for the economy. Every day the government is closed, billions of dollars in economic activity grind to a halt. Federal contracts get delayed. Federal employees go without paychecks. Services stop, and uncertainty spreads like wildfire through the financial system. Simply put, GDP growth slows, and investors start to panic. And markets despise uncertainty, as you saw yesterday. You see, they thrive on confidence, liquidity, and predictability. When those disappear, the first reaction is almost always the same. Risk assets get sold off fast, especially the 24-hour Bitcoin market and crypto, because those are the only things open. Combine that with the fragile economy, record high stock valuations, and market setting on mountains of leverage positions, and you have a perfect storm. The moment the shutdown news broke, we saw money rushing in, and now we're starting to see it rushing out, just like clockwork. What followed, though, wasn't just a price drop. It was a domino effect, amplified by automated trading system, margin calls, Binance, and all those kind of market manipulators that are moving coins and getting them back for cheaper. Wash trading, really. So, macroeconomic events and instability are hurting. The market psychology can combine and create chaos for everyone that invests in Bitcoin or crypto in general. But I'm a Bitcoin channel, so let's talk about Bitcoin. Because, well, that's what happened yesterday. Was unprecedented. A $20,000 red candle in a single day? That's the largest ever in history. This wasn't a minor correction or a momentary blip on the chart. This was a full-blown liquidation cascade after markets closed with little volume so they can move the market easier. You see, billions of dollars in leveraged long positions were wiped out almost instantly. Every single $1,000 drop triggered more automated stop losses, more margin calls, and more panic selling. It was like watching a perfectly stacked line of dominoes collapse, one after the other at lightning speed, and it was really sad. By the time most traders even realized what was happening, it was already too late. Their positions were liquidated, their accounts were drained, and all the while, the whales, the big players with deep pockets, were waiting patiently at the bottom, quietly scooping up Bitcoin at massive discounts. Really, all of crypto. You see, the lesson is brutal but clear. Volatility isn't random, and panic is expensive. Every major red candle in Bitcoin's history has shaken out weak hands, leaving only the patient, the disciplined, and long-term believers standing. Yesterday was no different. It was a real-time stress test of conviction, strategy, and nerves. And if you watched my channel this week, I talked about wash trading and leverage already. In traditional markets like stocks, there's something called the wash trade, and I want to repeat it. It exists to prevent traders from selling an asset at a loss and immediately buying it back to manipulate the prices or claim a tax advantage. It's designed to keep the system fair. In crypto, that rule doesn't exist yet. There's no guardrails. There's no IRS stopgap. There's just code, liquidity, and whoever has the biggest wallet. And we saw that with Binance. We saw Robinhood kind of shut down, and so did other things like Coinbase. That means whales and market makers can sell into strength to crash the price, then buy it back seconds later, legally, and profit massively. It's market mechanics at its rawest, and it happens in minutes. And that's exactly what we saw yesterday. The panic hit, leverage traders got liquidated, stop losses triggered, and the market dropped like a stone. The whales, they didn't flinch. They let the cascade happen, watched retail traders get shaken out, and then loaded up Bitcoin at bargain prices. I even know I bought extra yesterday. So you see, this is why I always say trading with leverage in crypto is like walking into a casino. The house always wins. Your edge only comes if you're patient, disciplined, and committed to the long-term game, buying spot Bitcoin, not chasing every red candle or FOMO spike. Moments like this aren't random. They're deeply psychological. Every big move in crypto is designed to test emotions, patience, and conviction. You see, whales know that fear drives decisions faster than logic. When the market looks like it's collapsing, retail traders panic and sell. Meanwhile, institutions and the smart money are quietly accumulating at the bottom, taking advantage of the chaos. You see, the 20,000 point red candle? It wasn't just a number on a chart. It was a test of conviction, a challenge to see who is here for the long game versus who is trading on emotion. If you panicked and sold yesterday, you lost. I'm sorry. Plain and simple. But if you stayed calm, held your position, and watched the dust settle, you're now seeing Bitcoin stabilize as smart money returns and re-enters into the market. Every Bitcoin cycle has one of these shakeouts. They are natural, inevitable, and almost surgical in the way they separate short-term players from long-term believers, and you should always watch your Bitcoin liquidation heat maps. The lesson is clear. Volatility isn't your enemy. It's a filter. It shows who truly understands Bitcoin long-term potential and who's just playing the casino game, who's betting, who's gambling. First, volatility like this always signals one thing: opportunity. The biggest moves in Bitcoin history have always been born out of chaos. Remember Mt. Gox, the China mining bans, the multiple 80% drawdowns? Every single time the headline screamed, Bitcoin is dead, and every single time Bitcoin came back bigger, faster, stronger, and more adopted than before. That's the pattern. That's the DNA of Bitcoin. Second, if the US government shutdown really does drag on past 30 days, it's not just a Washington problem. It's a global confidence problem. Markets hate uncertainty, and GDP is going to feel that pain. But here's the twist. That kind of instability is exactly why Bitcoin exists. It's not tied to politics. It's not run by a central bank. It's math, it's code, it's the hedge against the very chaos we're watching unfold. And that's why I believe it's going up. And finally, if you truly understand the fundamentals, the 21 million coin hard cap, the decentralized control, the institutional adoption growing daily, and the next halving just months away, well, this isn't the end of the story. It's another test, another stress test. You see, another reminder that Bitcoin doesn't just survive volatility, it thrives in it. So when people panic, smart investors prepare, because every bear candle in Bitcoin's history has planted the seed for the next bull run. And I believe it's coming, especially as we lag gold. So to wrap this up, yesterday's crypto collapse was one of the history books for sure, one for the history books. A total market cap drop from 4.1 trillion to 3.1 trillion, $800 billion loss in just 8 hours, Bitcoin's first 20K red candle. And between the US shutdown, the market manipulation, the trade war, which really had nothing to do with it, it was just sell the news, retail traders got crushed. But this is also when disciplined investors prepare for the next move. Well, now I want to hear from you. Do you think this crash was natural market movement or pure manipulation like I'm saying by the whales? Let me know your thoughts in the comments below. If you find value in today's episode, hit that like button, and more than anything, subscribe to this channel, as I'm trying to grow this Bitcoin community, and I want people that love Bitcoin just as much as I do. Well, that's your Daily Hodl. Stay sharp, stay disciplined, And as always, lead, pray, hodl. I'll see you in the next one.